Hey guys, Scott here. I want to talk to you about one of the most important property forecasts you're going to see for 2026. And the reason it matters so much is timing. We're now late in the year 2025. We've got almost all the data in. We know how inflation has behaved this year. We know the economy has held up better than anyone expected. We also know the RBA is still uncomfortable with our inflation situation. It's very sticky. And we also know that rate hikes are now being openly discussed again for 2026. So this is no longer a guess made in the dark. Realestate.com.au and PropTrack have now released a forward-looking forecast for 2026 that already factors in sticky inflation and interest rates being higher for longer than what we thought. That's exactly why this forecast matters, because despite all of that, despite tighter financial conditions and affordability pressure, they're still predicting that property prices will move higher again in 2026. And when a platform like realestate.com.au makes that call, you must stop and pay attention. They're not a bank running a model once a quarter. They see live listings, they see buyer demand in real time, they see where people are searching, where competition is building, and where stock simply isn't there. Sure, they don't have the full picture, like a full research group, such as Freedom Property Investors, but their insights are still highly valuable. In this video, I want to walk you through what PropTrack is actually forecasting for 2026, which cities are expected to lead again and why, and what that means for you as a buyer or an investor. Stick with me because this will change how you think about the property market for 2026 and beyond. Let's start with the headline numbers. According to realestate.com.au's latest property market outlook, national home prices are expected to rise again in 2026, with growth of around 6 to 8% across the country. And here's why this forecast is a big deal. This growth is expected despite the fact that in this model, they have assumed no rate cuts coming in 2026. It's also expected despite affordability already being stretched to its limit across most capital cities. Even with those pressures, PropTrack believes prices will continue to push higher. If this forecast plays out, it means something historic. For the first time ever, Australia's capital city housing markets are likely to push well beyond a median price of $1 million. That's a psychological and financial milestone we've never seen before. 2026, according to realestate.com.au, could be another year where property prices break new records because supply is still incredibly tight. That's the key driver here. There simply aren't enough homes being built to meet demand. And as long as that doesn't change, prices remain supported even when affordability looks uncomfortable. Now let's talk about where the strength is expected to sit. PropTrack expects Brisbane and Perth to remain the strongest performing capital cities in 2026, with price growth forecast between 7 and 10%. These were also the top performers in 2025, and that momentum has not gone away. The key reason is simple. In these cities, the number of homes being built is still nowhere near enough to keep up with population growth. Active listings in Brisbane, Perth, and Adelaide remain around 40 to 45% below pre-pandemic levels. That's a structural shortage. Even if demand eases slightly, there just isn't enough stock to relieve pressure. Sydney is expected to grow more moderately, around 5 to 7% in 2026. The reason is affordability. Inner and middle ring Sydney is already extremely expensive, and even with government incentives, first-time buyers simply can't get into areas within 30 to 40 minutes of the CBD anymore. They are priced out. They're being pushed further out, which naturally limits how fast prices can rise in those core areas. Growth continues, but it's going to be more restrained. Melbourne, on the other hand, is expected to pick up pace in 2026, with growth closer to around 7%. As confidence returns and demand rebuilds, PropTrack expects Melbourne to regain momentum. Now let's talk about interest rates, because this is where a lot of people get tripped up. Yes, some banks are now talking about the possibility of a rate hike in 2026. Others think rates will stay on hold. But here's the key point. Even with that uncertainty, even without rate cuts, PropTrack still expects prices to rise. Why is this so? Because interest rates affect borrowing power, but they don't fix the housing shortage. Rates don't build homes. Rates don't increase listings. Rates don't slow population growth. We've already seen this. Between 2022 and 2023, rates rose sharply, 12 increases in succession, yet prices didn't collapse. Once buyers adjusted, the market found its feet again. The core issue never changed, and that is a supply shortage. Now guys, let's get to the main point. Here's the question I always ask myself. How much do I actually trust these forecasts? Let's rewind for a moment. Now back in December 2024, PropTrack forecast that national property prices would rise by just 1 to 5% in 2025. When that report came out, I remember covering it on my blog, Australian Property Update, and I also discussed it with my co-founder, Liana Pan, who is Australia's #1 property analyst and researcher. And honestly, we laughed at those numbers, not because PropTrack didn't know what they were doing, but because we could see what actually was coming. At the same time, rate cuts were clearly on the way, government incentives were about to increase demand, and housing supply was nowhere near enough. Now, Liana, being a data scientist and an actuary, made her own forecast with her research team, and we actually put videos out on YouTube, and we said very clearly that 2025 was going to be another year of strong growth. Other groups were far more conservative. KPMG said prices would rise by around 5%. Domain said 5 to 6%. Fast forward to now, and national prices are tracking up around 9 to 10%. They all undercalled it. And to be fair, that's what big forecast houses usually do. They're conservative by design. So when I look at the 2026 forecast today, do I agree with the direction? Absolutely, we do. Do I think prices will continue to rise? Absolutely, we agree there. But do I think this boom could be bigger than what PropTrack is forecasting? Honestly, yes. If the housing shortage doesn't get fixed and the government simply hasn't been able to do it, and if the population growth doesn't suddenly stop, which history tells us it never does, then basic economics tells you exactly where the property market is going to go. More people, not enough homes, prices move higher. It really is that simple. So that's how I'm reading the 2026 outlook, not through fear, not through headlines, but through supply, demand, and common sense. I'd love to know your thoughts on the 2026 outlook. What do you see? What do you think will happen to prices? Where will the main price movements be? Which cities, which areas? I'd love to read your comments. Also, what do you think about the research done by these different groups? Drop a comment, guys. I generally love to see your comments. And also, make sure to hit the subscribe button so you never miss one of these daily property updates. I do these videos every single day, your 5 to 7 minute update on the property market so that you can be a property insider. Take care and see you at the next video.